Good morning from London. I'm Anna Edwards alongside Guy Johnson and Valerie Tytel. We're an hour away from the opening trade. Here's what you need to know. Attention firmly on the Fed decision later today, with traders betting the central bank will cut interest rates for the first time this year. US tech giants Microsoft and OpenAI pledge investments worth tens of billions of dollars in the UK as they join President Trump on his second state visit. And the future of TikTok. Bloomberg learns that Oracle, Silver Lake and Andreessen Horowitz are part of a group set to buy the app's US operations. Under a deal Presidents Trump and Xi will discuss this week.
Well, heading into this Fed decision, we have S&P futures essentially trading flat. European futures playing catch-up. Yesterday, they fell more than 1%, playing catch-up today in the green, up 0.3%. Euro-dollar broke through the year-to-date highs, trading around a 4-year high today. Maybe that was the reason for the European equity weakness yesterday, and those 10-year yields holding in steady at 4.02 ahead of the Fed decision later today. The countdown to the opening trade starts right now.
Wednesday morning, the countdown to the decision does start right now. We're going to talk a lot about the Fed over the next couple of hours. UK CPI breaking on the screen right now. Pretty sticky, pretty much in line with expectations. The Fed decision today in so many ways is the boring bit. Yes, we're expecting a rate cut from the Fed. I haven't seen a journal article telling me that I should be expecting 50. 25 looks very much like the base case. But then what? That's when life gets interesting. Who's going to vote? Where are the dots? What is Powell going to signal? How is the market going to react? What does the dollar do? There's so much more to discuss. 25 is the boring bit. Yeah,
the rate cut is the boring bit. I'm more interested to see at 7 o'clock, what do the dissents look like? Can we get a three-way split in the voting, having the more dovish members like Christopher Waller claiming they need to go for a 50 basis point rate cut, the more hawkish members still warning about the labor market. Maybe they are saying that a rate cut isn't justified at this time. The dot plot, another interesting one, given how much the market is pricing in at the moment. The market is assuming we go for 3 by the end of this year, another 3 next year. That would be a markedly shift downward in the dot plot. And lastly, how does Powell sound in this press conference? Does he sound open to the idea that October is a done deal and that this pace of rate cuts is going to be solid into year end? Or does he flag inflation risks on the horizon? Does he flag that, yes, they are cutting, but they remain cautious?
Yeah, absolutely. So much to watch when it comes to the Fed today then, Valerie. Ven Ram making that point on the Markets Live blog that you make about the guidance, whether they are OK with what the market is pricing in or whether they want to push back against market expectations. Because if you look at 2026, the market is pricing that we get down to 3% on rates. The Fed dots from June have us down to 3.6%. So even if we get, we get cutting today as expected and we get some dovishness, is it really going to be as dovish as the markets are already pricing? So you might get a kind of hawkish response.
We've already, the market's priced in the rate cuts. So how do equities go higher from here, I think, is a key question, which we constantly debate. But retail sales yesterday, really strong. The US consumer spending. Yes, sentiment indicators look weak at the moment. The consumer doesn't feel good. I generally watch what consumers do rather than what they say. And what they're doing is spending money like it's going out of fashion, which is fascinating. We'll talk about fashion later, Burberry. Services inflation is the logical kind of derivative of that. Do you continue to see high services inflation? Torsten Slok's out with a great note. Just talking about all the things that are strong in the economy right now. US air travel remains robust. Restaurant bookings remain solid. Las Vegas visitor numbers look good. Hotel bookings remain strong. Bank loan growth is increasing. Bankruptcy refilings are stable. Is this an economy that needs 6 rate cuts right now? How does Powell deal with this kind of information at the moment that tells us we've got a strong economy?
Yeah, I feel like there have been periods over the last year or two where we talked about a sort of bifurcated US consumer, and maybe we're going to get back into those conversations about parts of the consumer doing well, other parts of the consumer sector not doing quite so well. But maybe that's a conversation we look ahead to. Let's talk about the UK, though, because we need to move on. The UK has halted negotiations with the US to remove tariffs on British steel in a blow to the industry. It comes as President Trump is, of course, in Britain for his second state visit, which is set to officially get underway later today. Let's get more from Bloomberg's Lizzie Burden, our UK correspondent, who is at Windsor Castle. Lizzie, tell us what we expect then from the pageantry of today.
Well, welcome to Windsor, Arno. This 11th century fortress behind me, not the usual venue, of course, for a state visit. That's Buckingham Palace, but this is an unprecedented second state visit for Donald Trump. And there's a lot of business on the table during this visit. $10 billion worth of economic deals to be done, to be expected, including on defence technology, a nuclear partnership. We've already had commitments from the likes of Alphabet and Microsoft coming through. But, as you say, expectations management going on as well. Steel tariffs expected to stay at 25% because Keir Starmer is accepting the certainty and the competitive advantage of having lower tariffs than 50%, as others are benefiting from, although it is still a blow to business. But look, this visit could not come at a worse time for Prime Minister Keir Starmer. His party languishing in the polls. He's had 3 forced departures from his government in the past 2 weeks, including his UK ambassador to Washington, Peter Mandelson, over his ties to Jeffrey Epstein. And Epstein, of course, is the link between Starmer via Mandelson, the King via his brother Prince Andrew, and President Donald Trump himself. So there could be some awkward small talk and some difficult questions when it comes to the press conference at the end of this trip.
Lizzie, thank you very much. Lizzie Burden, our UK correspondent at Windsor. And, of course, she's setting out the wider context there, the wider political context in the UK, the sort of transatlantic Epstein connection, which will loom over this. But there are areas where we have seen progress, as Lizzie was pointing out, all of these deals around technology. But even there, some asking questions about whether the focus is in the right place. One of our colleagues, Palmy Olsen, in Bloomberg Opinion, asking whether the money has been spent in AI in the right places. And others contrasting with France and saying France is all about homegrown AI technology, whereas here is the UK trying to leverage the relationship with the United States to benefit and piggyback off the US success. And you wait and see which path proves to be successful.
And you have to think that this is going to be, some sort of transactional in nature. We know that Trump likes to do deals. Is he bringing all this US tech investment to the UK for a reason? What does he want in return? Because it's very funny to see this pledged UK investment happening alongside the pharma industry pulling investment from the UK.
Yeah. And I don't know whether that's a relationship with the UK government or a relationship with the US government that's a factor in the decision-making there. They want the UK to spend more. They want the UK to have higher prices on drug pricing. And obviously, the Trump administration wants investment into the United States. GSK talking about that. I think the tech story is interesting. The UK is a leader in AI technology out of its universities. And therefore, I think there is quite a lot of cross-pollination in terms of the technology sector in the AI space between the two. So in some ways, it is logical. You could build it, but in some ways, you're already invested in the US tech via that relationship. So, I don't know. We'll wait and see.
Yeah, that's part of the argument Palmy makes about getting the financial services industry in the UK to back UK tech as it grows a little better. Should we have a quick nod to the CPI number? I say quick because it's entirely in line with expectations, but the UK CPI number coming in at 3.8%. So some better news on CPI, services CPI, if you're looking for that to go down. That is slightly lower than had been anticipated, dropping a little.
The Chancellor says, I know families are finding it tough and that for many the economy feels stuck. That's why I'm determined to bring costs down and support people who are facing higher bills. What does that tell us about what is coming down the pike towards us in terms of the budget? Talking about tech investment, should we just have a little moment and talk a little bit about Chinese tech this morning? Big moves. Baidu's up circa 20% this morning. We saw Oracle move some pretty big numbers last week. Now it's the Chinese term. And what you've got here is a broker upgrade on Baidu. Baidu's struggling in terms of its advertising business, but it's now investing in chips, and it's got an AI model that's rivaling DeepSeek. And the stock market is really responding to this. So it's going to be interesting to see whether or not this has got legs. The numbers in terms of the overall investment in China pale into insignificance to what we're seeing over in the United States. But they are getting bigger. And it does seem we're along for the ride. You were flagging as well the fact that the Chinese are getting into the lithography business as well. We're now starting to see that. Is a separate ecosystem evolving? And if so, how does that challenge what the United States is doing and the money that's being invested there? The Chinese are very good at commoditizing technology.
Yeah, could it challenge, one of Europe's flagship companies, ASML? It was a report from the FT overnight that SMIC has been trialing a new deep ultraviolet lithography machine, which is right up ASML's alley. So perhaps this competition from China.
Yeah.
China producing its own ecosystem on its own will have some negative effects to European technology.
Yeah, I mean, we have increasingly seen that over, since 2020, that has gained momentum, the separation of these two technology ecosystems, and we see that more and more today. That takes us to TikTok, doesn't it? Because the separation of TikTok is part of that, having to enforce the national security laws that were brought in by the previous administration in the US. We now have an agreement, it seems, but we lack the details. So President Trump has said there's an agreement, and we understand that the US operations will be owned by Oracle, Andreessen Horowitz, Silver Lake, but we don't know the dollar amounts on the table. We don't know the stakes that each are taking, and we don't know for sure that this does comply with the law. We have had a movement of the date out till December, so it seems there is quite a long time to get this deal done once again.
It looks like we're operating on what we were operating before. None of this, so far, none of this seems new. The bit that I do think that is new, though, is the bit about where the algorithm kind of is based and how it works. They're talking about licensing the algorithm. Is that enough, as to your point, to satisfy the legislation in the United States? Does the algorithm need to be US-based and US-derived in order to satisfy the legislation? But is that something the Chinese are going to be OK with?
And will that play into the valuation? As you mentioned, we still don't know the price tag that they're selling this stake for. It's China's most valuable private company. It's not valued often. Will that be a big signal to maybe not the wider AI trade, but the social media trade and valuations at the back of that?
Maybe this is exactly what they'll discuss on Friday with Trump and Xi when they talk. And if we can get through this, then maybe that opens the door to all those other trade conversations.
Trump's definitely a details guy. That's how things are going to get resolved. What have we got coming up on the show? Let's walk you through some of the great guests we've got lined up. Patrick Armstrong, CIO of Plurimi, is going to be joining us shortly. Jennifer McKeown, Chief Global Economist at Capital Economics, the Fed, the Bank of England, etc. Helen Jules, CIO for Fundamental Equities, EMEA at BlackRock. How does the euro-dollar change the narrative around European equities? Anna Rosenberg, Head of Geopolitics at the Amundi Investment Institute, joining us a little bit later on. Much to discuss. Val.
And for the risk events on the horizon, let's get you set up for that. At 9 a.m. today, it's the ECB's wage tracker. Then later, Trump's UK state visit does begin. He does meet the King at Windsor Castle just after noon. Later today at 2:45, the Canada's rate decision. They are set to resume their rate cutting cycle that's been on pause since March. That's very much the theme of the Fed rate decision at 7 p.m. UK. We get the statement, the SEP, and the dot plot all released at 7 p.m. At 7:30, Jerome Powell takes the stand for his press conference and questions.
Staying up?
Definitely.
Must watch television a little bit later on from Jay Powell. What else do you need to know this morning? British drug maker GSK is pledging to invest $30 billion in the United States over the next 5 years, making the announcement just as President Donald Trump arrives in the United Kingdom for his highly anticipated state visit. The British firm now expected to allocate $1.2 billion towards a biologics facility in Pennsylvania and then make investments to enhance AI and advanced technology capabilities in its US manufacturing sites. The US, remember, accounts for circa 50% of GSK's revenue. The Nestle chair, Paul Bulcke, is now going to step down from the role a little earlier than planned. The decision comes after investor concerns have grown over his handling of the departure of CEO Lauren Fricks after an undisclosed relationship with a subordinate came to light. Vice Chair Pablo Ayla, who is due to succeed anyway, Bulcke, next year, will take over as chair on October the 1st. Ayla was the former CEO of Inditex and has served on the Nestle board since 2018. And the man accused of killing Charlie Kirk has now appeared in court, charged with first-degree aggravated murder. Prosecutors say they intend to seek the death penalty for Tyler Robinson. Kirk, who was a conservative activist, was shot dead while speaking at an event in Utah last week.
Coming up on the programme, a cyber attack has brought Jaguar Land Rover factories to a standstill. We'll discuss the fallout from that, how the pause in production is impacting its European suppliers and more. Plus, we keep an eye on the European tech companies at the start of trade today after AI optimism pushes the Hang Seng Tech Index to a 4-year high. We'll also watch ASML for the reasons Valerie indicated. But up next, we get back to the all-important Fed decision out later today, of course. If you have questions, if you want to get involved in any of these conversations, IB plus BBTV Go. That is the function on the Bloomberg terminal. This is Bloomberg.
42 minutes to the market open. I can't do the calculation on how long it is till the Fed decision, but I'm sure Val's got that number in her head. What do we need to know?
Guy, many things to watch in this Fed decision. For me, though, it's going to be the dissents that are going to be the most interesting because we all love a bit of drama. Could we see a three-way dissent in the voting today with the more dovish members voting for a jumbo rate reduction and the more hawkish members still warning on inflation, wanting to keep rates steady? Then it's also going to be of interest just how far the dot plot does shift. The market is really expecting a market shift downward in that dot plot. And any guidance on the pace, this would be more of a question to Jerome Powell in the Q&A and to see how he responds, whether he leaves the door open for perhaps another pause in October, or is he more convinced that the pace needs to be a bit quicker to get towards neutral? As I said, the market is already pricing in such a substantial dovish shift. This is the market implied terminal rate here in yellow. We're currently pricing in a terminal rate south of 3%, so 150 basis points lower than where the Fed funds rate is currently at the moment. Will the dot plot meet expectations? It does seem like there is a high bar to allow this Treasury rally to continue. Remember, we do have those 10-year yields hovering around year-to-date lows just above the 4% handle at the moment. It's helped the equity market out. It's also helped the dollar continue to be on a back foot. We're eyeing down 3-year lows for the Bloomberg Dollar Spot Index. Perhaps it'd be today that gives the guidance on where we go next for the Bloomberg Dollar Index.
Yeah, the dollar seems to be a big factor. Look at your WEI screen on your Bloomberg and currency adjust it. Start to see what the maths looks like. It's beginning to change quite dramatically. Val, thanks very much indeed. Patrick Armstrong, CIO of Plurimi, is joining us around the table. Good morning. 25 feels like the boring bit. 25 basis point cut. What's the interesting bit?
Yeah, if there's dissent, you'll probably have someone voting for no change and maybe one or two voting for 50 basis points. Yep. Everything was guided very clearly since Jackson Hole, so there's no surprises today. The politicization of the Fed is the ongoing theme, though, that I think we're going to be dealing with over the next 12 months, and how far that goes really determines the dollar, the direction of equity markets, if we get a melt-up because of excess liquidity, or if we have a Fed we can trust.
What are you positioned for?
I'm positioned pretty neutrally right now, where I think we've got incredibly high valuations, which offset a pretty likely backdrop of a liquidity-driven melt-up. So I do expect equities to move higher by year-end, but I don't want to be overweight equities when they're trading at record multiples on price to sales, price to book. You've just never seen the S&P 500 at a larger multiple on those measures than today.
Yeah, that ties in with the Bank of America does that fund management survey. And in that, Patrick, 58% of fund managers say they see global stocks as overvalued. Does that tell us anything useful about whether they might... I mean, that doesn't mean they're going to get out of them necessarily.
Yeah, so I've neutralized my position. We were overweight throughout the summer, but I think that's probably where I am. Equities in the U.S. are very expensive. They're not priced for perfection, but they're priced for a very aggressive easing cycle, and probably an unwarranted easing cycle where the Fed does cut more than is required. Different factors may drive that. But it's hard to be out of risk assets when you have excess liquidity. And the economy maybe needs some stimulus. Maybe it doesn't based on spending on the jobs market. It probably does. The stock market doesn't need more liquidity, but it's going to get it.
Right. Is there risk for, well, all kinds of assets in terms of the Fed meeting today and what happens at the short end of the curve? Because the short end is pricing in a lot of cutting this year and next. And even if the Fed gets more dovish, I know Ven Ram on the Markets Live blog writing it's not going to get as dovish as the market. So is there risk there?
That's my case, and I think everybody that I know is dollar negative based on real clear reasons why. But I do think it's in the price now. You've got the Fed fully priced for this year and much of next year with the cuts that may or may not come. If inflation does start to move up in Q4, which is plausible, the Fed may not be able to be as aggressive on the cuts as what everyone's expecting. So I don't expect a dollar rally, but I do think the factors that have driven the dollar sell-off are in the price now. And if Trump does lose in the midterms, you may have a moderating force. So it's Trump's policies pushing the dollar down. If you do have checks and balances, I think that may create a base in the dollar.
What do you make of this recent argument that the U.S. economy is reaccelerating? I mean, yesterday's retail sales figures were maybe an evidence of that, if you want to argue in that way. Do you think that the U.S. economy is going to pick up into the end of the year?
I don't think it's going to pick up. I think it's going to run at a subdued rate. You do see retail's very strong. A big part of that is higher prices, though. So in terms of real growth, I don't think it's going to be as strong as the nominal growth. You'll probably have an acceleration in nominal terms, but I expect tariff consequences are going to be felt throughout Q4. I think some companies pre-purchased, they changed pricing decisions, but I do think that's going to feed through in Q4. So nominal acceleration, but not real acceleration.
And how do you expect maybe Jerome Powell to field those kind of questions today in the press conference? Will he still flag concerns about the labor market? Will he give any nod to the fact that maybe the U.S. economy is continuing strong into the later half of the year?
I think he's going to highlight that there is real clear strength on the spending side of things. Consumers say they're not confident, but they're spending as if they're very confident. And the job market is why he's going to say I'm cutting today. But it is a two-sided market. It's not unequivocal that we do have to have this wave of cuts that everyone's expecting. If there is that reacceleration that you referred to, the Fed can't be cutting it with that kind of backdrop. So it's something he'll be thinking about. There are some very clear doves in the committee as well. They won't be thinking like that. So I do think the press conference will be two-sided. It won't be, we do have a wave of cuts ahead of us over the next 12 months. It will be, we're going to be data dependent, looking at inflation, looking at spending.
How are you playing tech?
I own 4 of the Magnificent 7. Okay. I do think they are still very valuable companies. They're expensive, but not much more expensive than the market on some of them. So Alphabet's had an incredible run. I own Alibaba. Wish I had more, I suppose. Yeah, but I've been worried about the political backdrop there. So I didn't mind having some, but I didn't want to have a too big exposure.
But you wished you'd had more. Look at the numbers. Look at the numbers. You think the numbers get better?
Yeah. China's really stimulating its economy, not talking about stimulating its economy now. So for years and years it said we will be doing it, and it's coming through now. And China tech on valuations isn't expensive. You have a lot of political risks. If the U.S. and China do come to loggerheads, we've seen what's happened to Russian assets for foreign investors after the Ukraine invasion. If China does something in Taiwan, that's always a risk. Xi's been unequivocal. At some point that happens. So I don't want to have a big weight there in my developed market portfolios, but I do have one allocation in there.
So if AI is a structural theme, Patrick, in China or in the United States, does that mean it's not vulnerable to cyclicalities?
You do have structural spending, I think, in AI spending. I don't think anyone's going to change their mind on that. Several years from now, you may have a build-out like we did in 2000 on fiber optics, that things were just spent and ended up being good news for the world, but not good news for the company. So that probably will happen. I think structural spending is on AI, tech, and European defense. Those are sectors I like to be.
I mean, some people make the point that there's so many large language models and they might not all survive, and that some of that capex will be, quote unquote, wasted.
It will be wasted. I think there will be winners. We'll probably end up in an oligopoly position and maybe even have countries having national security concerns where they really subsidize to have a national leader in AI and large language and generative AI. So there's going to be many twists and turns. I don't think we're getting away from it. Spending's going to continue. It may become more centric on country basis, but there will be winners, losers, obviously.
Patrick, just quickly, what do you make of the fact that we have gold near record highs at the same time the equity market is powered a lot by that AI trade? Does that worry you?
You couldn't outline a better backdrop for gold right now with geopolitics, with a Fed that may be politicized, a store of value. Gold is an incredible geopolitical backdrop. What the price is, I don't know. I like gold equities, and I like tips. I like tips as my safe haven hedge, and I like gold equities as a speculative play on debasement rather than gold itself right now, because if you're paying the speculative part, you get a double gearing on that with the gold equity. The reserves in the ground become worth more, and their cash flows go up when gold prices rise.
All right, thanks for joining us. That was Patrick Armstrong, the CIO of Pluri Wealth Management. Very interesting to get his thoughts on the Fed ahead of that decision, which Guy, I've calculated, is 11 and a half hours away, just in case you were wondering.
Well, is our countdown clock.
But coming up, it's more than just the Fed this week, with the BOE and the BOJ also delivering rate decisions. We'll discuss the big week with Jennifer McCowan, Chief European Economist at Capital Economics, next. This is Bloomberg.
This is the opening trade. 30 minutes until we get that opening trade here in Europe. The futures picture then looks pretty flat. Flat to positive, though, here for European stocks. CAC 40 futures up by 0.25%. US futures are entirely flat, Valerie, a sort of amble up to the Fed decision. Yes, we how the market is treating this.
Yeah, that's how it feels in fixed income as well. We have the Treasury market completely flat to start this morning's trade. Also, European fixed income not going anywhere fast either. We're less than 1 basis point lower on the German 10-year yield. The big catalyst that the market is waiting for is the Fed decision later today.
Okay. Let's talk about how it is all going to play out. 25 looks boring, doesn't it? That's not where the interest is. Is this a political decision? Are we going to see any doves as political? How do we think about where we go from here? How does Powell keep everybody together? If people dissent, can he ignore them? Jennifer McKeown, Chief Global Economist at Capital Economics, joining us around the table. What's exciting you about this decision?
Well, the messaging really around what's going to happen after this month. I think it's a done deal for this month, isn't it? It would be a massive shock if there wasn't a cut. So I guess it's whether we get that three-way dissent, perhaps, with Myron joining the others to vote for a 50 cut, and also what the messaging is beyond that, whether there's any language that suggests that that the labour market really is very worrying, that is very much the focus of attention for the Fed now, which would lead us to believe that this is,
do you think the US economy needs multiple rate cuts?
No, probably not. The economy looks to be, aside from the labour market, which is a big part of the economy, obviously, things look OK, don't they? I think GDP growth's tracking at around about 3% annualised.
Does that tell us that the labour market's doing odd things that we don't understand yet? Immigration, what's happening with kind of participation? There's a lot of strange things happening here. It feels like a pivot. That's
right. Yeah, that's right. I think a lot of the weakness of the labour market is supply-driven and about the crackdown on immigration. And that obviously means different things for the inflation implications. That means that there's less disinflation coming from this weakness in the labour market than there would otherwise be. But it's uncertain. We don't have good data on immigration, really. So the Fed's going to be waiting to see what happens. And also, of course, waiting to see if we see more of those tariff effects in the inflation data that we've been waiting for.
Jennifer, what kind of story do you think they're going to try to weave with their projections? Because I was reading that it might be the first time this year that they might not revise their inflation projections higher. For all the meetings previously, they've revised higher their 2025 inflation projections. Do you think that's something that's likely going to be a surprise to the market?
I'm not sure that would come as a big surprise to the market. I think the interest rate projections might come as more of a surprise. I'm not sure that they'll change dramatically, which would leave them still a bit above where the market anticipates. The market's got rates going down to more or less 3%, and I'm not sure that the Fed's projections will show them going quite that far down, but that's a big question, really, for this.
Yeah, I think that is a risk for the market, but maybe one can argue, little devil's advocate here, that the market is pricing in what's going to happen with the next Federal Reserve chair more in that pricing, so perhaps we might not be right for that kind of disappointment.
That's right. So it may be that even if on the face of it the projections are fairly hawkish, markets just ignore that and assume that, next year it's a new world.
Yeah, so I mean, this is interesting, Jennifer, thinking about what is guiding the markets thinking. Is it the next Fed chair? Is it the political pressure? A combination of the two, perhaps? I was looking at this Bank of America Fund Manager survey today. John Author's providing this chart to me that shows, we've seen a real tick up in the percentage of fund managers expecting CPI to increase. This is over the past months, not just the past week or something. And along with that, no expectation that interest rates rise. And that seems really out of kilter with what we would normally expect. I mean, is that just the politics? Our expectations that the politics has an effect?
Yes, I think it probably is, largely about concerns around Fed independence and also about the fact that we're in kind of a stagflationary environment, isn't it, aren't we? So it's difficult for any central bank to deal with that. Do you focus on the activity side of things, or do you focus on the near-term inflation outlook? So there are, good reasons why you might think, well, inflation is going to be a bit higher, but the Fed might tolerate that because the labour market is quite weak. Looking much further down the line, we might get some weakness in inflation from this. But I think there probably is an element of concerns about credibility and independence.
OK, and moving on to the Bank of England, because we have that this week as well. Are you expecting any more cuts this year from the Bank of England? This seems to be a live conversation. We've had a couple of days' worth of data that's come in pretty much in line with expectations in the market and Bank of England expectations, I suppose.
Yes, we're not anymore. We had thought that the bank might cut more this year, but the latest data, particularly on the inflation side, the stickiness of inflation, still of wages, has made us think that it may not. There may be a case also for waiting for the budget from the Bank of England's perspective to see what's coming there and whether that might have further inflationary implications before it continues cutting. But we do think the labour market is loosening quite a lot in the UK, and that looking into next year, wage growth is going to come down quite sharply and there will be calls to cut.
What are the implications of a significantly weaker dollar for Europe? We're approaching 120 euro dollar right now. There's talk of it going further than that, maybe much further than that. How does that play into your models?
Well, it doesn't help the Eurozone economy. It's obviously already struggling.
If it gets too strong, do you think the ECB cuts more? Do you think, how kind of strong a connection could there be?
Not a very strong... It certainly won't make an explicit connection. It might list it as one of a number of factors that are a headwind for the Eurozone economy. But I think really fundamentally that the lack of competitiveness among Eurozone industry, particularly German industry, is a major issue.
And you make the currency stronger, just makes that harder.
It's just another problem for the Eurozone. So it might lead to renewed rate cuts next year.
And when it comes to the Bank of Japan, the decision is on Friday, so kind of like on our back burner at the moment of risk events that we have coming up. But do you think that there is a risk to the market that perhaps we're going to get a hike sooner than the market is expecting?
Yes. We're forecasting a hike in October still. Now, that's a bit... that's a fairly bold call. But looking at the tightness of the labour market, I think really further tightening is warranted from the Bank of Japan. It's in a completely different position to the other economies that we've been talking about, given that interest rates are still so low, 0.5%, and the labour market is tight and tightening, unlike those elsewhere. So I think some tightening is warranted.
OK, yeah, some views suggest that the politics gets in the way, but you think they go this year. OK, Jennifer, thank you very much. Jennifer McEwen, Chief Global Economist at Capital Economics. Coming up on the programme, the British drug maker GSK pledges to invest $30 billion in the United States over the next 5 years. We'll talk about that, put it in some context for you, and we'll look at the other stocks that we're watching this morning. This is Bloomberg.
19 minutes to the equity market open here in Europe. 11 hours, 18 minutes and 58 seconds until the Fed decision. I pointed out. Chinese tech absolutely rocketing today as we see the AI story really beginning to gain traction. How much traction should it be gaining? I'm going to go with the American pronunciation of this. AZVC. Sounds better, doesn't it? Sounds awfully like a band. Founder and managing partner Jack Selby. He also, out of interest, runs Palantir Money. Selby says that AI euphoria may have led to the biggest bubble yet in private technology investing. He's sounding warning bells that a correction in startup valuations is on the cards. He spoke on the sidelines of super returns in Asia to Heslinder.
The euphoria that's going on in coastal BC, especially around AI, I think arguably may be the biggest bubble that we've ever seen in private tech investing in kind of modern times. So as an example, OpenAI had to revise their cost estimates for the next 4.5 years upwards by 250%. So a rounding error, so to speak, of only $80 billion. And it just seems insane to me because if this had been a publicly traded company, the stock would have sold off by 90%. But instead, there are just these breathless storytelling narratives around how all the AI trees are growing to the sky. And I think when the dust settles, whenever this bubble pops, there's going to be tens, if not hundreds of billions of dollars that will literally be incinerated.
Can you draw a comparison to the .com era when that bubble popped?
So when we were doing PayPal many years ago, the search engines were finally kind of coming into existence. So Yahoo was kind of the incumbent, and then a little company called Google came in to challenge that incumbency. And there are other search engines like AltaVista and Lycos and other companies I probably don't remember. But most people will not remember Lycos and AltaVista because they went bust. And so one of the questions to potentially ask yourself is, what will be the Lycos and AltaVista equivalents for today's AI breathless environment? Because there will be many. And I think there will be companies that, when the dust settles, will survive and do quite well. And I'm sure OpenAI has a good chance of being one of those companies, and many other prominent companies as well. But at the same time, there will be many, many other companies that will just not survive. And those companies will incinerate billions and billions of dollars of capital, of LPs' capital, in the various venture funds that invested in these companies. And that shakeout will be massive.
Massive. AZVC, that sounds like ACDC, managing partner Jack Selby joining us. He's famous for that, but I think he's probably also more famous for the fact that he runs Peter Thiel's family office. This is the guy that runs Peter Thiel's money and is also part of the PayPal mafia. So running Peter Thiel's money must be quite the operation, I would imagine. Let's get a take on this. Bloomberg Tech Europe host Tom McKenzie joining us around the table, trying to confuse me this morning with a tie and no jacket, but we'll park that one for the moment. He's really cautious. He's talking about billions of dollars being incinerated. He's talking about a massive shakeout. I look at Chinese tech this morning, I don't see that. I see basically money just crowding, piling in to this space still.
Part of the Chinese story, part of it is valuation. There's the valuation gap versus the US peers. Part of it is that they are actually delivering. There is evidence now, whether it's robo-taxis, whether it's in-house chip design, that the likes of Alibaba, the likes of Baidu are not only getting the product out with AI-infused product, but also they're starting to monetize it as well. And hence you get the upgrade, for example, of Goldman Sachs recently upgrading Alibaba. You've had an upgrade most prominently this morning of Baidu, and that's sent the shares up 19%. And that was focused on the in-house chip design. Alibaba recently had partnered with a major telecom company, the second largest in China, to supply AI accelerators, chips, to that company. So there's the cloud part of the business for both Baidu and Alibaba that is coming through, but also what they're doing on the hardware front. So these are examples of companies, if you're bullish on Chinese tech, you've got the valuation story, but also you've got the fact that they're coming through products they're monetizing as well. This is in the context, though, of 7 straight weeks. We're almost on 7 straight weeks of gains now for the HS Tech Index. Some would say there's a lot of retail money going into play as well. There are risks to this run-up. How sustainable is it? But these companies are, at least on some metrics, delivering on the AI story.
And then the other story that we need to follow is what's going on with TikTok, being it the China's most valuable private company, might have some sort of valuation now that it needs to sell off some of its U.S. entity to U.S. counterparts. What do we know about the deal?
Yeah, so a key sticking point, obviously, in negotiations between the U.S. and China. We know that President Trump is loath to close TikTok down because he, as he says, it was very helpful in his election outcome. The law, of course, was signed. It was a bipartisan law signed by President Biden that was meant to ban TikTok, but of course that's been pushed back now for a 4th time, by the way, until December. TikTok sits under ByteDance, to your point, a $400 billion company. What they seem to have agreed on, the US and Chinese sides, is a consortium including Oracle and including Andreessen Horowitz and Lakestar as well, or Silver Lake, I should say, not Lakestar, Silver Lake, which is a PE firm. So that consortium will come together. They will take a stake. ByteDance's stake in US TikTok will fall below 20% as required by the law. And this is really interesting. Apparently, they have agreed as well, ByteDance, to license the technology around the algorithm, which is the secret sauce around the recommendations of TikTok. They will license that to that consortium. There are still some big questions in terms of how big the stakes will be for Oracle and the others within this consortium, Andreessen Horowitz and others, and also the price tag as well. Most recently valued up to $40 billion US TikTok. What is the valuation right now? And do they finally manage to square this away with this meeting between the two, or this phone call between the two presidents on Friday?
Yeah, back here in the UK then, Tom, how are the deals for, the amounts of money being invested by Microsoft, OpenAI, in conjunction with President Trump's visit to the UK? How are they likely to go down in tech circles? I'm seeing some people contrasting the UK's stance with that of France, which is maybe more kind of grow your own. But the UK has tried to engineer partnerships between these big US names and some smaller startups here in the UK.
Yeah, I think the differentiation is important in terms of the UK approach versus France. It's real money. It's tens of billions of dollars. These commitments coming through from OpenAI, from Nvidia in terms of the AI accelerators. We're talking arguably hundreds of thousands of AI accelerators of chips that will be housed in data centres around the UK. The UK government says it's going to be opening and setting up AI zones. Microsoft saying it's going to be investing about $30 billion over 4 years. And so these are real commitments. CoreWeave, BlackRock, Salesforce on the software side.
Is it really real? I just come back to the comment from ACDC. No. That so much of this money is going to get incinerated, that we don't know ultimately who's going to be the winner here. So there's a lot of commitments at the moment.
Yes.
But where does that ultimately...
So to get to that endpoint where Microsoft has actually invested $30 billion over 4 years, you have to assume that the momentum continues. To your point, there's a question mark over that, whether or not we can get the energy to actually power these data centers, and whether or not the regulatory regime will allow these data centers to be built as well. And there are partnerships involved as well. So N-Scale is a big partner on the data center front. So that partnership has to work. The regulatory regime has to come together. The energy piece has to be there. And the overall AI momentum has to push through at least 4 years if you're going to get all these commitments actually in the ground to deliver.
Tom, thank you very much. Bloomberg's Tom McKenzie with the latest on the tech sector. We started this conversation talking about bubbles in tech, didn't we? Yes. And we were hearing about the biggest bubble in modern times. What does that define modern times? Does that include the
it does for us.
Yes. Does that 2000?
2000 is included.
Because I remember Lycos and the Lycos dog, but that probably me, you, Guy, we remember this. Maybe not the rest around the table. Let us get the thoughts of Mark Cudmore on what is Fed Day. Markets Live executive editor joins us this morning to talk about the markets in 3 minutes. Fed Day. We're getting excited, Mark. What are you going to be watching in particular? Because everyone's expecting a cut, and there's a lot of focus on the guidance, of course, what that kind of guidance will look like. Will it reinforce market pricing or push back against it?
So I think there's two big things to watch for. It's the dot plot. Is obviously the big one. How many kind of cuts are priced in, not just for the rest of this year, but into next year? There's an awful lot priced into the curve, so it's going to be pretty hard for the dot plot to match those expectations. Our colleague Ven Ram has done an excellent macro review at making that point and saying that short-term yields have upside because of that. But on the flip side, the kind of counter-argument is, do people really care about the dot plot? Because it's by a bunch of Fed officials, some who might be pushed out by this administration over the coming year, and there's a new influence kind of coming in. So that's one kind of short-term dynamic, but I don't think they'll run away with the readings in that, because the guidance will be partially dismissed on that change of Fed governors over the coming year. I think that's probably the really big issue. It's the questions that'll be really interesting. The press conference that'll be more interesting than the forecasts. So I think how Powell handles those questions is where we'll get a lot of volatility. Given the amount of uncertainty on exactly what setup we get, not the actual rate decision, I know there's a slight risk of 50 basis points, but pretty unlikely. The uncertainty about what Powell will say, what we get in the dot plots, there'll be a lot of short-term volatility. But I'm not sure that it's going to be the big macro driver, given that we are getting Miran going to come in, going to have more influence. We're potentially, at some point in the future, going to lose Cook and get a replacement there. It's going to increasingly become Trump's Fed. The macro story is very clear, though. This is another kind of emphasis that the dollar downtrend is there for the coming years, and it has another 10-20% to fall over the coming years. And I think another big corollary of that's been really popular at the moment and is a valid one is, as part of this end of US exceptionalism, which has been a big theme this year, the dollar downtrend is part of that. It is going to be good for emerging markets, and emerging markets are going to be some of the big winners over the coming years. We might see a real new EM cycle.
Mark, if you could pose a question to Jerome Powell today, what would you ask him?
Oh, that's a hard one, Valerie. I would say, if you could give us an honest view on his own personal view, not fall back to the committee, but his own personal view. I would like to put the onus on him and the accountability on him on where he thinks inflation will be at the end of next year and the end of the year after. I think one problem with the committee, and it's generally a positive, is that people can hide behind the committee for these forecasts. But sometimes you want to put some personal accountability. And as the Fed chair, as the person who most governs this, I would love to know exactly what his dot plot projection is each time, where he stands on that kind of stuff. So I think if I could ask him one thing, and I know he'd actually answer it, I would pin him down in that. But of course, he's very skilled at fobbing off these questions, so he'll probably ignore me.
Well, sorry for asking a hard question to you, Mark. That was Bloomberg Markets Live executive editor Mark Cudmore. And remember, you can get up-to-date analysis and insight from Mark and the rest of the team. Just type MLIVGO on your terminal. Now let's get your stocks to watch ahead of the European Cash Equity Open with Chloe Melly. Chloe?
Good morning, Valerie. Let's keep an eye on Nestle today as the chairman is stepping down earlier than planned. Investors have been questioning the way that he has handled the firing of the CEO, the former CEO, Laurent Frex, which happened just a couple of weeks ago, if we remember. Investors had lost some of that trust, and that made a decisive break necessary, at least according to some analysts. But, of course, this creates additional management turmoil for Nestle, and that could put further pressure on the shares, which are already on a massive downward trajectory and are down 34% 10% over the last 5 years. So let's keep an eye on that today. Moving on to the pharmaceutical sector, where we have got some good news for Novo Nordisk, which has seen, of course, quite a few setbacks recently, but it was upgraded to a buy rating at Berenberg, which said that it now preferred Novo over Eli Lilly, its most direct rival, said it has fresh ammunition to fight back against Eli Lilly, especially with the release of oral Wegovy next year. So that could potentially boost the shares of Novo this morning, which have been underperforming Eli Lilly by a wider and wider margin. But of course, this new rating could provide maybe some welcome relief. And finally, let's stay in pharmaceuticals, but move over to the UK, where GSK has announced a $30 billion investment in the US over the next 5 years. This is something that coincides, of course, with the arrival of Trump in the UK, and quite an important visit. So we could see some movement in the shares of GSK, which have been having quite a lot of ups and downs, are currently down over the last year, as we have been seeing so much uncertainty over the tariffs that Trump threatened on pharmaceuticals over the last few months. So let's see how the market reacts to this sort of courting or wooing of Trump by GSK this morning.
Chloe, thank you very much. Equities reporter Chloe Melly with some of the stocks that could be on the move. It's perhaps not a day for individual stocks. Mind you, the overall market might not go anywhere very quickly. Yesterday was quite negative, actually.
So yeah, this is the thing.
Yeah, so maybe that's the setup that matters.
And why was yesterday negative, I think, is really interesting. There's a bunch of factors. The euro is one of them. Probably the overriding factor. And if you assume that the euro is going to go further from here, what does that impact is that going to have? But does it make how do US investors think about it? How do European investors think about US assets as a result of this? The changes are bigger. You haven't seen the S&P in euros recover to where you were pre-Liberation Day. That's just an interesting point. Anyway, the Open's next. 5 minutes. This is Bloomberg. $11 hours and 2 minutes until the Fed decision. That's the main event of the day. I want to talk about yesterday, though, because in some ways it's a useful prelude to maybe what we're going to see out of the Fed decision a little bit later on. European stocks got hit and hit hard yesterday. A bunch of factors behind that. One of them, though, certainly is the fact that we are seeing the euro gaining strength at the moment. Kind of 120 is the level we're now approaching at. How does that impact future profitability going forward? So European equities are rolling over. What is interesting is that the US market almost sort of gapped down as well at the get-go of trade yesterday before kind of crabbing sideways. I bring this up because I want you to appreciate that that is the context we go into Val's futures picture with, which looks positive, but the two-day chart definitely doesn't.
Yeah, we're looking fairly positive to start the equity futures trade so far this morning. Now, note that is off of a steep underperformance of yesterday, Guy, as you mentioned. Euro Stoxx 50 futures are up 0.4%. They were down over 1% in yesterday's trade. FTSE 100 futures up 0.25%, and DAX futures up near 0.4%. Anna, what stocks are on our radar this morning?
Yeah, we've got a few. Let's talk about them then, Valerie. Let's start with Nestle, and this is a focus on the chairman, a focus on the management of the business. So the Nestle chairman is going to step down early after investors have been questioning his handling of the removal of the company's former CEO. So we know the backstory there. Interesting that the chairman is now going earlier than expected. Novo's in focus, and this is interesting. It could have been doing badly on the back of the fact that Eli Lilly's rival drug around obesity has gone down well at a conference of doctors over in Austria. But on the other hand, Berenberg has upgraded Novo. So we'll continue to watch that one with interest. And GSK also in focus. They have announced an investment of $30 billion into the US at a time when most of the money is coming the other way with President Trump, Guy.
Absolutely. Let's talk a bit about how this market is going to open. Let's figure out what the picture looks like. I think we're in a holding pattern, a little bit of a holding pattern, waiting for the Fed a little bit later on. Do you really want to make some big decisions as we anticipate what is coming down the pike towards us? So the FTSE 100, fairly quiet this morning. We'll talk about Burberry in just a moment. The IBEX is up by 0.2%. The Stock 600 is up by 0.1%. In some ways, these are not good moves. You need to see this in the light of the move yesterday, which was aggressively to the downside. We're not exactly buying the dip this morning, would be my take, on a market that is only up by 0.2%. Take a look at what is happening with euro-dollar. That's certainly a significant factor here. Take a look at what's happening with some of the corporate news as well. But this doesn't feel like a market that's ready to buy the dip. And you can kind of understand why, with the Fed approaching so rapidly and other rate decisions coming down the pike towards us as well. But after a big move yesterday, we are kind of, as we were, coming into this Wednesday session. Val, what does the sector story look like?
Well, look, all sectors yesterday ended up in the red. We have most in the green so far to start this morning's trade. 16 in the green, only 4 in the red. At the top of the basket currently is travel and leisure. It seems like Accor, Intercontinental Hotels are also starting the session on a positive foot. We also have retail and technology at the top of the basket. Now, interesting because we thought maybe ASML would be hurt by the news overnight about SMIC developing their own lithography machines, but it does seem like tech in Europe over the big picture is holding up pretty well so far this morning. At the bottom of the basket, we've got basic resources, utilities, and chemicals.
Yes, and lingering on that basic resources move, I mean, that's just the absolute opposite of yesterday, where that sector was top of the pile. So now it's the weakest, and it's moving with the gold price. So Fresnillo is one of the weaker spots, down by nearly 2%, and we see a weaker gold price, although the direction of travel for gold has certainly been higher in recent days.
I'm just going to check out Burberry. I excuse the pun already that I have used. Burberry is only up, is up by 0.6%. Did you see the trench coat?
Yes.
That the first lady got off the plane wearing last night. Do you think somebody'd warned her about the weather?
That's a danger in the rain if it's that long, surely.
And a tripping hazard. I mean, look how long that thing is.
I have never seen a trench coat. It is, yeah, exactly. Anyway, somebody clearly warned her that it was...
Are you drawing a link between this and the Burberry share price?
Maybe.
We are on screen.
I can't work out whether or not it's a good thing or a bad thing. How do you view the Trump administration? Maybe that affects Burberry, but it's definitely... It was an interesting choice of clothing, I would say. But it's not reading through this morning
because it's raining today.
Yeah, precisely. She's clearly seen a weather
comments
forecast.
on clothing this week, haven't you?
I am on trend.
Where are the Armani suits? I'm waiting for those to be broken out.
What are you saying? You're saying this isn't one?
Hey, well, joining us now to discuss the markets, getting back to the markets picture, maybe away from fashion for just a moment, the CIO for fundamental equities at EMEA at BlackRock, Helen Jewell, is joining us. Now, we're all waiting for this Fed decision today. Where do you think the fireworks are going to be?
I actually don't think there are going to be any fireworks. Well, great to be here on this rainy morning, but I don't think there are going to be fireworks. I think everyone is expecting cuts. We're expecting 3 between now and year end. So I don't think there's necessarily going to be any fireworks. And I think you're seeing quite a lot of this kind of noise in the market. You saw the pullback. We saw a little bit yesterday. And actually what we need to think about is what are the key drivers going to be between now and the end of the year? And it goes back again to this AI story. And actually what's really interesting now is the second leg of the AI story. You saw it last week with Oracle, which is really about things like the data centers, the cloud spend. And they're the kind of stocks that I actually think could be where the fireworks might be between now and year end on a positive side.
Well, if that was the second leg of the AI trade, what's the third leg? What are you watching for the next catalyst? Is it positive or negative? Because Guy thinks it could be negative.
I don't. I'm just listening to AC/DC.
Well, there is a negative side, and I think the software is where there is some concerns about negativity. But the positive side, and we've got this as well with this commitment for spend in the UK, is the power infrastructure, the stability, the grid stability, the energy efficiency that comes along with that. So companies like National Grid, which will really benefit from being part of that. So yes, there is negativity. And the software, I think you've seen a lot kind of pullbacks in some of the software names. But those companies which are part of this initial spend, which is where a huge amount of this CapEx, the CapEx commitment is real and the CapEx commitment is there. Those are the companies that I think will really benefit as we come in. So the second leg, and perhaps the less interesting companies which really provide the power, that is the third leg as well.
OK, so here's a conundrum. Those companies that provide the power, does that include renewable energy? Because if you're looking to grow the base, install power capabilities quickly, then maybe you draw on all the possible sources of energy, including those renewables. But we know that President Trump hasn't lent into that theme. And so how do you treat the renewable sector?
Yeah, Anna, it's a great question. And actually, if you look at the renewable or the sustainable energy stocks, they've had actually a really good year to date. Some of them are up, well into double digits.
Which is easy to miss when you focus too much on wind, perhaps.
100%. Everybody's focused on the negative side of things. But I think the word sustainable, everyone thinks sustainable is about kind of the opposite of kind of carbon and carbon and fuels and fossil fuels. Actually, sustainable energy is about keeping the lights on. And I think this is the narrative that people need to understand. With data centers, for the first time in a long time, you're seeing the US now need more energy. It has been flat because the increase in demand is offset by energy efficiency. In Europe, you're seeing energy flat for the first time, and it has been shrinking. So you need the stocks that will help keep the lights on. And those are the stocks that we're really focused on. Siemens Energy, for example, had a really good year to date. So sustainable energy, sustainable means keeping lights on, not just about kind of green energy or renewable energy. And actually, if you look at the One Big Beautiful Bill Act, there was a lot of positivity in there. It kind of pulled back a long way, but actually where it landed was not as bad as people thought. So really interesting place. Already year to date, those stocks have gone well. I think further to go.
OK, so you're looking at earnings stories like those that are that can benefit from our need for power and energy, for example. I guess you're also looking for earnings stories that are robust to some of the other threats. I'm thinking of tariffs. Or is that not a concern anymore? Because tariffs, with the Fed's pivot from inflation concerns to labour market, tariffs really haven't been mentioned around this desk as much as they were 6 months ago.
No, and I think it's because now they're the known. The big areas that the markets don't like are the unknowns. And actually, if we look at the earnings season that we've just had, the Q2 earnings season, the drag was not on tariffs. It was, as Guy has mentioned this a lot, is on the currency and on the strength of the euro and the weakness of the dollar. We think that could have been even about a 5% drag on earnings for European companies over the last quarter, because a lot of our companies are exporting companies. So you've seen the companies that did very well year to date be very much those domestic-focused names, aerospace and defence and the banking sector. And the difficulty with the dollar is you can't exactly predict it, whereas tariffs is kind of a known now. It's a known you can bake in. So actually what we saw during the Q2 earnings season was the drag was not tariffs, the drag was actually more on currency. And that is still an unknown, particularly with exactly where the Fed might end up.
Can I just go back to the tech story, and then we'll come back to the FX story? The guy that runs Peter Thiel's family office, Jack Selby, we played a clip of him a little bit earlier on. He thinks not all these tech companies, not all these AI companies are going to make it. So all these commitments, how solid are they? How certain are we that all these companies, within a 5-year time frame, are going to be spending this kind of money? I keep asking people now, do you pay for ChatGPT? How does ChatGPT... Can it monetize all of this investment? Can it make a margin on all of this investment? And I think that remains a key question at the moment that we don't understand. We're all kind of slightly starry-eyed about all this money's going to get spent. At the moment, it's commitments. Like, it's not in the ground yet, and it's not certain that all these companies are going to make it and be able to monetize the AI that they're talking about. There's lots of large language models out there at the moment. There's lots of companies spending money. Is it all going to come to fruition? And if it doesn't, what are the implications?
So I think it's really important to distinguish the money that is being committed to actually spend on the infrastructure and the factories, and then the kind of output and the software. I think, will every part of it actually be spent on infrastructure? I mean, every single dollar, every single cent? I actually think it will. I'm going to go out there and say, yes, I think that will, because I think these companies go bust. Feeling... But the companies from the infra side of things and the data side of things and the data center side of things, a lot of those are kind of real companies. And the spend is coming from companies with significant amounts of cash. The US spend and the US cash is real cash that is there.
But Oracle, for instance, is going to invest a lot of money. Its stock went up 30% the other day. It's basing that on OpenAI and a couple of other companies like it delivering on their spending commitments. Are all those companies that AI and the others all going to be here in 5 years' time, or are we going to see a winnowing process? Because if they're not all here, that number is not going to be as big for Oracle as it is making out at the moment. There's a lot of kind of projections going on at the moment, and I remember a time when we made a lot of projections as well about users and how much money they would spend.
They're not all going to be here, but that doesn't mean that the spend isn't going to be there, because what you'll see is the big diversion between the winners and the losers. And the winners and the capital that those winners can put and the winners will spend will be there to support that spend, I think. So, yes, if you look at it as an average in the number of companies, the maths don't work. But if you look at it, that the winners will end up spending a lot more.
People will pay for it. People are going to pay for this service in the way that is commensurate with the kind of investments that are being made.
We believe for those winning companies within that space, then yes, the rollout will happen and it will occur. Doesn't mean that there won't be some collateral damage along the way for kind of loser companies, but on aggregate, the spend and the commitment to the spend and actually the spend coming through is going to...
So the safe place to play the AI trade is not in the OpenAIs of this world.
Correct.
It's in...
Exactly. The factories, the infrastructure, the build-out, because that is going to be there, even if it only comes from, let's say, 5 companies that spend a huge amount rather than 50 that spend a little bit each. I think that is probably not realistic. but some real winners in this who continue to commit to spend. That's already what we've seen this year with the AI play over in the US. I do think that's going to be what you see.
And then when it comes to the investment pledges into the UK that we've heard, a lot of that is on infrastructure, data center build-outs. Is that something that makes you more positive about the UK ecosystem as a whole?
Yeah, no, absolutely. I mean, it's a great commitment, and it's great to have these kind of commitments. From a public investing perspective, a lot of it is in the private space. But there is, again, that second derivative for some of those public company names who will benefit from, again, being part of the infrastructure story that you see around that. So, yes, it's a big signal, and it's a really, really good sign.
Great to see you. Thanks for stopping by to see us.
Thanks, Guy.
Always a pleasure. Helen Jewell, CIO, Fundamental Equities, EMEA at BlackRock. Call 6 looks a little like this morning. We'll see how Schneider's trading. It is up in a market that is rising a little bit after a big down day yesterday. That's one of those kind of companies that maybe Helen's talking about. ASML, though, is now weakening as the Chinese maybe get into the lithography business in a much more deep and meaningful way. Rheinmetall's a little firmer. Just take a look at all these stocks on a two-day basis. Yesterday was brutal. Today you're seeing some recovery. Anyway, let's talk about some of the other names that we're watching as carefully as we are. Chloe Melly, what do you got?
Good morning, guys. So let's start with Centrica today. Centrica is up this morning 2.4% on the back of an upgrade from Morgan Stanley that said that Centrica was now its top pick in the UK utility space, and that is thanks to its current work, but then also the potential for further business for projects like the nuclear station of Sizewell C, for example. So that is driving the stock this morning. Moving on to the steel sector, Tenaris was downgraded to a neutral at Piper Sandler. This is due to a lack of catalyst, and then also those tariffs still weighing on that story for Tenaris, and it is down now 1.3% almost. Moving on to ThyssenKrupp, which is also operating in this steel sector, but is actually up this morning, and it got upgraded to a hold rating at DZ Bank, and that is it is a bit more well positioned, a bit more diversified in the sort of end markets that it works with, and therefore it is doing a little bit better than Tenaris. Moving on to Rheinmetall, which was upgraded as well to a new buy by William O'Neill. This makes now 20 buys for Rheinmetall, which is only one sell. So this is really an analyst favorite, and that is driving the stock this morning. We are up 2%. And finally, let's end on McBride, which is a smaller company, a UK company that makes laundry products, personal care, and the earnings really were really positive this morning, and that drove the stock 9% this morning. So really massive move for McBride this morning.
Chloe, thank you. Chloe Melly with a rundown of stocks on the move. Coming up on the programme, we'll stick with some corporate news. Nestle's chairman steps down from his role a little earlier than had been planned. We'll talk about the backstory around that, what brought them to that decision. This is Bloomberg.
Welcome back to Fed Day. 17 minutes into the equity market session. We are 10 hours, 42 minutes and 26 seconds away from that Fed decision. I'm keeping Val updated just to make sure she's on top of things. Let's talk about some of the...
She's got her own clock.
Does she?
Yeah, she was telling us the time earlier.
I know, she was just doing that in her head just to show off, though. Her maths is better than mine. Let's talk about some of the corporate news that we are watching this morning. The Nestle chair, Paul Bulcke, is going to step down a little earlier than planned from the world's biggest food company. This, of course, comes after investors have questioned his handling of the ouster of the former CEO, who was found to have had an undisclosed romantic relationship with the subordinate. Joining us now is Bloomberg's Deirdre Hipwell. Was it inevitable that he was going to have to go as well? He was going early anyway. This whole thing we've been through a series of CEOs. It's all looked very messy. In some ways, some responsibility has to land at his door.
Absolutely. He was on his way out, but I think since the unexpected sacking of the former CEO, pressure has just grown on him, and there's been increasingly more questions asked about what he and the board knew and when they knew it and how they handled the departure of the former CEO. But I think more widely, to your point, as chairman, he has presided over unprecedented turmoil. I mean, this was a company that between 1981 and 2016 had only 3 CEOs, and now just over a year, they're on their 3rd CEO, the chairman's on the way out, and this is all happening at a time when the company's really not performing very well. So I think Bulcke had to go to make way for the new chair, Pablo Isla, and the new CEO.
Is this going to increase the pressure on the new chairman? Are we likely to see one that sticks this time, or is there going to be a revolving door again?
Absolutely. The pressure on Nestle is huge. I mean, their last update, their volumes are down. They're underperforming in China. They're having to increase marketing in their brands, which they have arguably underinvested in. They're trying to cut costs, and they're now trying to do that with a new chair and an insider CEO, but it's his first time in the top job. So I think Pablo Isla has a very tough job. And, of course, he's been on the board since 2018, so it's not like Nestle is new to him, but I think there's going to be a lot of pressure on him in particular to try and chart Nestle through these waters.
And Deirdre, many companies take relationships between staff members, certainly in management lines, very, very seriously. Nestle in particular talks a lot about its culture and has a real focus on its history and the culture that goes sort of with that.
Absolutely, and they did cite that when they sacked Laurent Freixe, and they said that as soon as they knew that there was incontrovertible evidence that he had failed to disclose this relationship, he had to go. But of course, it was the second probe that finally led to his ouster. So I think there's just questions over how it was handled, and if they should have done something sooner.
All right, Deirdre, thank you for bringing us up to speed on Nestle. That was Bloomberg's Deirdre Hipwell. Now, turning to the auto space, the fallout from the Jaguar Land Rover cyber attack has spread to some of its suppliers, with the automaker extending a factory shutdown until at least September 24th. We're joined now by Bloomberg's Global Autos editor, Craig Trudell. What kind of impact is this going to have on the automaker's long-term picture?
Yeah, I mean, we're already a couple weeks into this. The company came out earlier this week and said that they're going to be shut down at least through September 24. There's real concerns about whether this will go on much longer than that. We've seen some reporting that the company has denied that maybe this would stretch actually for several months. If that were to be the case, I mean, this is a serious matter of cash flow for an industry where, you can go through cash very quickly. We saw that in the great financial crisis where, all of a sudden a company like GM that, had a lot of cash on its balance sheet, went by the wayside really sort of quickly. And Jaguar Land Rover is not a particularly big manufacturer and also owned by a fairly well-heeled parent in Tata Motors and the Tata Group. But this is a really significant blow to them if they cannot get back up and running in the near future.
Supply chains? Problem?
Suppliers, I mean, I think the Continentals, the ZFs of the world, they're going to be fine, right? They have many customers. JLR is a relatively small one. But there's a lot of really small suppliers for a company like JLR that have gone in, positioned themselves right next to a plant. Yesterday we had a story about their factory in Slovakia. There's a lot of small and medium-sized suppliers that this is, if not all their business, a substantial portion of it. And if we're talking about a months-long shutdown for the entire company, that's really problematic for a lot of companies around the world that supply this manufacturer.
Craig, the September for the auto sector kicked off with the Munich Auto Show, where so much was written about Chinese competition. No doubt that continues to be a theme. What have we taken away from that auto show around the competition that China can provide if it's allowed in the market?
I mean, I think BYD was if not the biggest story of that show, it was right up there, right? And they went from going into that show with real momentum to saying, we're going to double the size of our lineup, we're going to double the size of our dealer network. I mean, they're just going to keep on pushing. I think there's questions about just how much they're maybe pushing on a string a little bit. I do think that they have some brand building to do. And a lot of consumers still aren't that familiar with, maybe if they're familiar with the name BYD, I would guess that a lot of consumers, if you ask them to name a single model, they would have trouble. And yet, they are far and away the strongest among the Chinese. But you also have a much broader set of competitors that, there's just not that much room. This is a pretty crowded industry. And real questions in China about, just how much room there is for all of the companies that have been stood up there, say, in the last decade or so.
All right, Craig Trudell, thanks for joining us. That was Bloomberg's Global Autos editor, Craig Trudell, on the latest on the Jaguar Land Rover cyber attack. We're also getting some lines from the Bank of America conference from the Unicredit CEO, Andrea Orcel, saying he plans to accelerate their Italian business without M&A.
Basically, yeah, I'm going to go organic. If I can't take it over, I'm going to build it.
Yes, and also he has non-organic plans elsewhere, didn't he? I mean, we talked a lot about his intentions towards Commerzbank over recent months and maybe a little bit less interested than he was, but that certainly was a big theme. M&A across borders in Europe is one thing, but here he is talking about Italian businesses. And the Italian government has had some success in putting together parts of the Italian banking landscape that they wanted to merge recently. So there is some of that M&A happening.
But this also fits into the narrative of the fact that the Italian government is looking now to tax the banking sector a lot more. So, do you want to be in Italy right now when the tax levels are high? It's interesting that I don't know, if you can't buy it, you build it. How competitive do you need to be to take business away from Italy has a lot of banks. How competitive do you need to be to take some of that business away? Banks tend to be sticky.
And I wonder how expensive banks are getting if you're looking at doing M&A, because we've been talking recently about banks, trading at more than book value for the first time in a long time here in Europe. And so that means targets become more expensive, I suppose. Other things that drive the M&A, I suppose, the rates environment. Should we think about the Fed? We are how many hours away from that Fed decision?
Gosh, don't make me do the calculation.
In your
10
head.
and a half.
In your heads.
It's about 10 and a half.
10 hours, 34 minutes and 36 seconds. I bring this up for interest.
Thanks very much. But yes, Fed decision tonight. A lot of interest, especially when it comes to the divisions at the Fed and the drama that we all want to see maybe play out in these dissents. Whether we get a three-way split on the vote, and does Stephen Myron end up maybe convincing some of his new colleagues that Trump's policies, if you take them all together, are deflationary. I
thought it was interesting what Mark said about how some of the questions would be more interesting maybe than the answers. Maybe Powell will be trying not to be interesting about all the things he'll be asked about. I mean, I know nobody cares about the plight of journalists on a day like today, but it's difficult to decide. Do you ask the question that sounds good, but you know you're not going to get any response to? That's always the thing that goes through your mind.
It's a fun game where asking a central banker a question, you want to kind of be almost vague, so they take it where they think that you are meaning to go.
Oh, that tells you a lot.
See where they go with it.
There you go.
Wow, that's almost sort of Greenspan. That's the Greenspan strategy for dealing with central bankers. If you thought you understood my question, you clearly weren't listening.
Back at you.
Yeah.
OK, coming up, talking of the US, President Trump is in town in the UK for his second state visit. We will discuss what's at stake for UK business as the president prepares to meet with King Charles at Windsor Castle later today. Of course, a lot of the action taking place to the west of London today, other parts of the southeast later on in the week, rather than in the centre of London. Here we have live pictures of Windsor Castle, where the events, the pageantry of today will take place. The business agenda, perhaps, some of the geopolitics will loom on the agenda, maybe more on the maybe more headlines on that coming tomorrow. But this is Bloomberg.
Welcome back to the opening trade. We're 30 minutes into today's cash equity session here in Europe, and it is looking fairly positive across Europe. Eurostock 600, the broad benchmark, is in the green, up 0.2%. We are seeing some outperformance in the DAX. We have SAP up 3%. Rheinmetall also doing well, leading gains there. The CAC 40 up 0.2%, and the FTSE 100, the underperformer of the session, still in the green, up 0.1%. Guy, how is it looking under the hood?
OK, let's take a look under the hood. And I also think we should caveat yesterday's session was deeply negative, just to kind of put a bit of rain on the parade down at Windsor today. Stock 600 up 357, down 230, reasonably balanced market. Volumes a little light, but not by much. We are going into a Fed decision. I'm not going to do the calculation. I don't have it in front of me. Fairly soon, later on today, and I think people are probably being a little bit cautious. Is this a kind of better to travel than arrive moment? What's going to happen with the dollar? Lots of things going on. Let's talk about some of the 52-week highs and lows. Highs, ThyssenKrupp, Prosus, Sainsbury's. It's interesting that actually grocers are on the front foot at the moment in the UK. ThyssenKrupp is up by 0.5%. Prosus in the tech space up by 2%. Sainsbury's actually up by 2% as well. People are kind of trading down. They're trading also into white goods, which is interesting for the UK grocers. Let's talk about one stock that is on the downside. We've talked about it over the last few days as well. Beiersdorf. What does Beiersdorf do? It makes Nivea skincare matters. Alex Steele always used to tell me. Beiersdorf down by 27% at a 52-week low today. That's the one-year chart. Big block trade going out of the door, adding to the downside today, Anna.
Let's talk about some of the other big macro stories we need to think about today. Fed officials are expected to backstop a faltering US labour market by lowering interest rates today. It marks a shift after worries about tariff-induced inflation kept them on hold all year. Bloomberg has learned that Oracle, Silver Lake and Andreessen Horowitz are among the investors that would acquire TikTok's US operations under a deal that Presidents Donald Trump and Xi Jinping will discuss later this week. If finalised, the deal will resolve a sticking point in Beijing-Washington relations and help shape the fate of China's most valuable private company. And UK inflation is holding at an 18-month high, coming in at 3.8% in August. The reading is likely to keep Bank of England officials cautious about further rate cuts when they meet tomorrow, with policymakers expected to leave rates on hold at 4%, Val. And a lot of focus then on whether we get any more rate cuts in the UK this year.
Yeah, central banking a focus in the UK. Also, all the tech investment we've heard of late. Microsoft, OpenAI and other American companies have announced plans to spend tens of billions of dollars on technology infrastructure in the country. The pledges are part of a series of business deals that coincide with President Trump's second state visit, which officially gets underway later today. Let's get more with Lizzie Burden, our UK correspondent who is outside Windsor Castle. Lizzie, what can we expect from the pageantry today?
Yeah, let's start with the pomp and pageantry, Van, and get on to business, because that seems to be the order of the day here in Windsor. Really, today should be the low-risk day, in theory, but that, of course, is a relative term when it comes to President Trump. You'll remember back in 2019, on his first state visit to Buckingham Palace, they just sat down for the state banquet, and then an interview was published with the Sun newspaper in which President Trump had criticised then Prime Minister Theresa May. Deeply embarrassing, not just for him, but to those at the dinner as well. And there are lots of potential pitfalls on this visit again, including on Palestine and on Jeffrey Epstein, the UK ambassador to Washington, having been fired over his links to Jeffrey Epstein, of course. But on the agenda today here in Windsor, we're expecting the president to be greeted by the King and Queen. They'll go on a carriage procession around this 11th century estate with the Prince and Princess of Wales. President Trump says that Prince William is very handsome, he said when he was in Paris last year. So the King keen to deploy him once again. Then they'll have a private lunch. They'll lay a wreath on the tomb of the late Queen Elizabeth II. And then we'll have a flyover of US and UK F-35s and Red Arrows as well. So, Guy, I know you'll be jealous of that.
Yes, he will. You can send the pictures, Lizzie. Walk us through some of the business deals then, because there's the pageantry. That's what maybe a lot of the US delegation are here for. They want to soak up some of the atmosphere at Windsor Castle. But there are business deals. We've heard about some of them in the tech space. Run us through some of those, and what do we expect from today?
Yeah, $10 billion of economic deals supposed to be signed on this visit, including a defence tech cooperation agreement, nuclear partnership, the FT reporting that there could be closer cooperation when it comes to digital assets, although there is an ocean between US and UK regulation when it comes to crypto, so that'll add pressure on London to get a move on there. Some of the biggest names, as you can see on the screen, from Silicon Valley will be in town for this visit. Sam Altman there, Jensen Huang of NVIDIA as well. We've already had commitments from the likes of Microsoft and Google as to what they're going to invest here in the UK, but it isn't all good news. We've heard from President Trump saying that there's room to negotiate, and yet we hear that Prime Minister Keir Starmer is willing to accept these 25% steel tariffs for now, lower than the 50% that other countries are paying on their steel exports, but tariffs nonetheless, and that is a blow to business. We're also having our expectations managed when it comes to tariffs on Scotch whisky, despite all of Keir Starmer's lobbying there. So we await to see what this wiggle room is, but Starmer very much hoping that all the soft power on display translates into hard leverage when it comes to trade and geopolitics.
Lizzie Burden, thank you very much indeed. Our UK correspondent, Lizzie Burden, down at Windsor. We're joined now by Anna Rosenberg, head of geopolitics at the Amundi Investment Institute. Good morning.
Good morning.
Is this a state visit or a business trip?
I think it's both, right?
Okay.
It's, clearly, he's coming here because he gets special treatment. But at the same time, we know he likes to sign deals, so that's what's happening.
What should we expect, therefore? What are you looking out for?
Well, I think that the key point is that it is going to be smooth. That's a key issue. Because, as we've just heard, right, there have been hiccups in the past. And so far, everything we've seen from the president in terms of foreign policy has actually caused US foreign power to weaken. So he needs to get this right in order to get his alliance with the UK stronger again.
So there's risks to Trump here. Trump needs. What are the risks to Trump coming on this trip?
Well, I mean,
highlighting.
Look at what has happened over the last couple of weeks and months, right? We've seen a lot of actions from the US, but the US has actually looked weaker on the global stage. Right? Multipolarity has accelerated. We've saw China step up boldly, the relation with India getting better, with Russia. That is a risk to Trump in terms of great power politics, right? So he has alienated all his allies so far, right? And this is an opportunity for him to bring the UK back closer to the US and portray that the US can still have strong alliances, right? That's a key thing in a great power competition. You need strong alliances.
Yep.
So he needs to get this right, too.
Anna, in that context, what's the one hiccup you might be the most nervous about that could potentially happen?
Well, I don't think there's anything specific to watch out for, right? I think that clearly the Epstein issue is something to watch. That's the slippery slope in this relationship here. But overall, I think there's so much effort, especially from the UK government, to get this right, because the UK needs to get this right, too, right? I talked about geopolitics, and AI, the tech competition, is about great power politics, too. So for the UK, this is an opportunity, too, to align themselves with the US and, you know, get a stake in this boom that Europe is currently missing out on.
When it comes to investment, does it raise any alarm bells what's happening on the pharma side, that we've had these UK companies pull UK investments, announce US investments alongside this trip? Do you see that as a coincidence, or was that done on purpose?
I mean, clearly there's a risk to European business more broadly, right? I think one of the key goals of the Trump administration is to reindustrialize the US, to bring businesses closer to the US. And by the way, also the Biden administration, just think about the Inflation Reductions Act that we had. Same purpose, bring businesses to the US. And clearly, we are facing quite a lot of challenges in Europe, too. So for some businesses, this is an opportunity in the US, too. So clearly, we're going to see more tariffs on pharma coming, too. I think that's something that we will see more of. So it's a continuation of a trend here.
Anna, I'm interested in your assessment that the US has looked weaker over recent months, because I'm sure the Trump administration would argue that standing up to everybody makes you look stronger. Is that not the way it's played out?
Not really. I mean, clearly everything that Trump has been doing so far has been about increasing US power. But the effect has been the opposite, right? So, for example, one way to deter a potential enemy is to shore up your military capabilities, right? But what is happening is that he's doing the opposite. So that is increasing the risk from Russia. That's increasing the risk over Taiwan, too. You see the incursion to Polish airspace. This happened very shortly after it was announced that the US would reduce investment in military support in Eastern Europe. So we're seeing actions that are weakening the US. The tariffs on India going closer to China on the global stage. In a great power competition, as I said at the beginning, having strong alliances is your biggest friend. And if you erode those, you make yourself weaker.
Yeah, he sees the world so differently. I mean, alliances, whilst they might be on full display today with the UK, he's quite the Anglophile. But typically he puts more emphasis on deal-making, doesn't he, rather than those long-standing alliances? Or is that misleading?
No, I think that this is a key tension that is playing out, that he is very much a deal maker, a business person, but politics is not business, right? It's different. There are different dynamics at play. I'm not saying that they can't go together, but they're sometimes contradictory too. But the UK-US relationship is quite noteworthy here, and I think it's important to also stress that Starmer has managed to pull this off. Given that the ideological divide that exists between the two, the UK is right now the only country that has really strong and good relations with the US in Europe, right? The others are okay, not the only one. I mean, Italy's doing quite all right, too. But there are tensions here, and that Trump is here shows that the UK is kind of leading that relationship and managing it.
Starmer, the keeper of the keys to Windsor Castle, it would seem. Maybe that's playing in his favour. I mean, what about President Trump's pitch to Europe that he wants Europe to do secondary sanctions against China and India because of the role that they are playing in buying Russian energy? Is this serious? Is this something that is going to advance at all?
So I would say a few things. So firstly, this is, from Trump's perspective, a good opportunity to shift the responsibility to someone else from not imposing sanctions directly onto Russian oil importers in a much more meaningful way. And secondly, if he forces the phase out of Russian energy supplies to Europe, it increases the probability that U.S. energy sales are going to go up, right? So that's two motivating factors here. Quite unlikely that you're going to see 100% tariffs on India or in China. The EU and India are close to signing a trade deal, probably early next year. The negotiations are down the wire. And with China, the EU and the Europeans in general have to hedge geopolitically too. They don't want to alienate China either. So we could see some tighter sanctions this time around. We could see some sanctions on entities from China and India that are in the military and energy supply chain, but I wouldn't expect any big number out there.
Really interesting take. Anna, thank you very much indeed for stopping by to see us. As this trip gets underway, all eyes firmly on Windsor. Anna Rosenberg, Head of Geopolitics at the Amundi Investment Institute. Coming up, we'll get another angle on this story. The British drug maker GSK is making a massive bet on the United States. Why and how much? We'll talk about it next. This is Bloomberg.
Welcome back to the opening trade. We are 45 minutes into a European session that looks positive. Guy keeps reminding us, of course, yesterday's session was pretty negative, so put them together. And the image of today is slightly nuanced, but this is what we have right now. As we run towards the Fed meeting, US futures are pretty flat this hour. Let's talk about the pharma sector. The British pharma giant GSK is doubling down on America. The company is pledging to invest $30 billion over the next 5 years. The announcement comes as President Donald Trump is in the UK for a state visit. For more, we're now joined by Ashley Furlong, who follows the pharmaceutical sector. Good morning, Ashley. So I don't know what wider context to put around this story, because this follows multiple other drug makers with big US investments, but they're all trying to please President Trump. There's the other context that this is President Trump's visit here and he's bringing a lot of tech investment, so here's the UK sending something the other way. But let's start with the piling into the States. Why are they all heading to the US?
They're really trying to preempt a tariff announcement for pharmaceuticals. So they're trying to make sure that they are signaling to Trump that they are willing to manufacture drugs in America for American patients. And so GSK is the center of this $30 billion announcement, is a $1.2 billion investment in a new biologics facility in Pennsylvania. So that will be producing more drugs in the US. The complexity around these announcements is that they're likely to only come online in several years' time. So that might be the end of Trump's term. But it's really very much a signaling to the US administration that they are keen to work with the administration and to respond to his demands.
It just feels like there's a whole sort of series of UK companies, though, that are pharma companies that are saying, not here, we're going to go over there. Is this a negotiating tactic? Are all these companies going to exit the UK in the way that they're talking about? Are they trying to get West Streeting to spend more money on drugs on this side of the Atlantic, as Trump would like us to? How does this fit into the wider context?
Yes to all of the above. So
right, okay.
They are very much, saying to the UK government, you need to do more to keep us here. GSK is saying that they're still going to be doing the same investment in the UK.
Yeah.
Their peers are not all saying the same thing.
No.
We've seen AstraZeneca say they're pausing a development, Merck pulling out. They are very keen to continue to invest in the UK, but they're saying they need more. And they've sort of really got, Trump putting increasing pressure on them to make their investments there.
The timing doesn't feel like an accident,
Exactly,
does it?
exactly. And they've got China also showing, great R&D potential. All the really exciting new drugs are coming from China. So when you're looking where to spend your research and development spending, you go to the US or China now. The UK is increasingly looking, very far down that pecking order.
Well, speaking of exciting drugs, the battle between Eli Lilly and Novo Nordisk over weight loss drugs seems to have taken new levels. What's the update?
So the latest is on the pill version, and it's really interesting because, the Eli Lilly's pill is showing around 11% weight loss, and when that sort of announcement first came out, investors were really saying, that's not enough. Doctors are actually saying, this is enough. We don't need the 20% when we're looking at a pill. And what's increasingly important is the other aspects around it. So a convenient daily pill, potentially hopefully with less side effects, and maybe cheaper. And that's become really key. So we're seeing this competition on the pill version. So Novo has potentially a more effective pill. but it might not be as cheap because of how the molecule is structured. So if Lilly can bring a cheaper pill that might be easier to take with less sort of restrictions around when you can take it with food and drink, that might, give it another advantage.
And where does that leave the rivalry then between Novo and Eli? Is it sort of Novo still on the back foot and Eli on the front foot? That's been the sort of narrative over recent months.
In some ways, yes, but obviously the pill it's still going to be difficult to see how they position it. Whether Novo says we're actually going to reduce the price won't be as much. The price point is going to be key for the pill.
Where is this going? Like, what is the ultimate sort of... You go online and you look at how you buy this stuff, and it always comes with some sort of help with also losing weight or keeping weight off. Do people take it for a couple of months and then put it down?
No. We've seen with studies, once you stop these medications, you gain the weight back.
Right.
And the problem is when you're taking them, you're often losing muscle mass as well. So it puts you in a really difficult situation. So we really need a pill that could last forever, that you can be on for the rest of your life.
Wow.
All right, Ashley, thank you. That was Bloomberg's Ashley Furlong on the latest on the pharma sector. Let's get you set up for the risk events ahead today. Just at 9 a.m. UK time in 10 minutes' time, the ECB wage tracker is released. Later today, Trump's UK state visit does begin. He will meet King Charles at Windsor Castle just after noon. At 2:45, the Canada rate decision. They look to restart their rate-cutting cycle after being on pause since March. The Fed rate decision also follows after that at 7 p.m., where the Fed is widely expected to reduce interest rates by 25 basis points. Later at 7:30, Powell's press conference does begin and the Q&A to follow.
10 hours, 8 minutes, 48 seconds until that decision comes out. Keeping everybody on message. Bloomberg opinion columnist John Authors joins us now. John, we get 25. That seems like a done deal. Where does the excitement come from today? What are you looking forward to that is going to be interesting that comes out of this meeting? Because in some ways it could just be could be a complete dud, but I'm really hoping it isn't.
I mean, certainly when you get this kind of anticipation ahead of time, then there always is a risk of a dud. I think also, somewhat unfortunately, although Stephen Mirren gets to vote, he doesn't get a dot. The dots apparently have been done already, so we don't get some wildly diverging dot from the new governor suggesting wildly different ideas of where the economy is going. I do think the dot plot matters more than usual, in particular if they choose to signal worry about unemployment. That would matter, because that would really be quite a clear sign of further dovish intent. There is still a real possibility of a jumbo cut. I think the case for if you did a jumbo cut is quite intriguing in that you would probably say, here's 50 bips, that's your lot unless we get worse news than we're expecting. The way the last jumbo cut worked actually tends to justify that. So there's a possibility of some interesting switchbacks tomorrow if we get an initially big move in the rate and then a strong sign that that they're not going to go further. There is. I'm not particularly suggesting it, but I wouldn't rule out the possibility of a hawkish jumbo, which is a new monetary policy member of the menagerie that I will look forward to if we get it.
Well, John, there's a lot of unprecedented things that are also going along this decision. We could get a three-way vote split. It's also the first time that an FOMC voting member is also a Senate-confirmed White House economist, basically at the same time. Yes. And you have the Treasury Secretary calling for a full audit of the Federal Reserve. With all this going on, is there any argument in your mind that the Fed does need to be reinvented?
There's definitely an argument that it needs to be reinvented. This is one of the big problems with dealing with this, this remarkable frontal attack on Fed independence. I have been very critical of the way the administration has gone about this, and I don't regret that. But you don't want to seem as though you're defending the status quo, because there are a lot of problems with the status quo. There are two Federal Reserve banks in the state of Missouri, and only one rather in the whole of the West Coast, for example. This was obviously a system designed for a very different economy in a different country from the one we have now. So there plainly would be a very good reason for taking another big look at the Fed's governance, and also I've argued the mandate as it stands at the moment has actually been fulfilled. They have actually managed to keep inflation and unemployment nicely under control with low bond yields for most of the last quarter century. As people are very unhappy with the results, you can tell that from election results, that implies we do need to do something about the mandate. And that is a very big, difficult issue, which I wish wasn't being handled in this overheated way.
OK, yes, indeed. That's an interesting point to make at the end there, John. Just briefly, then, you appear to be in Hong Kong, which is not useful for asking questions of the Fed chair. But if you were in the room asking questions of the Fed chair, what would you be asking?
Well, I'm reenacting the movie Lost in Translation these days, so I probably will be up at 2 o'clock in the morning in Hong Kong to shout questions at the screen. I would ask him about that central question of unemployment. Are you now clearly more worried about unemployment? And what does that imply? And the other thing, given that worries about tariffs seem to have disappeared, do you have tariff derangement syndrome, as your new fellow governor has accused you of, Mr. Powell? Do we need to stop worrying about tariffs as a source of inflation?
Mr. Powell, nice touch. John, thank you very much.
Send a memo to our colleagues to ask that question, please do.
Yes, you could do that for Markets and Bloomberg. We'll send them the video. Markets and Bloomberg opinion columnist. And I'd like to congratulate John Authers on his Fed Day soundtrack. I've been completely distracted by looking at all the selections he's put on there.
Do you have any favourites?
Well, the first cut is the deepest. I don't know if that's relevant, is it? But it's on there.
This isn't the first cut, but yeah.
No. I didn't know that John Authers was a Charlie XCX fan, which has surprised me. I Might Say Something Stupid was a song that she did, and it's on the list. It's a diverse selection of music for your Fed Day enjoyment.
As we count down to that Fed meeting, at least we've got something to do now. Listen to John Authers' playlist. Of course, Surveillance is going to have some great coverage coming up a little bit later on. We're very much looking forward to that. They're broadcasting live from the Bank of America trading floor today. They're going to be joined by Brian Moynihan and plenty of others. Jim Jamaire is on the list as well. 10 hours to go. This is Bloomberg.